Most of us are familiar with, or at least have heard of, the idea of the gig economy, where short-term contracts and freelancers are disrupting the way the labor force thinks of traditional permanent job placement. As consumers, this has drastically changed the way that we live and expect the world to work. Uber and Lyft have given us transportation on demand. DoorDash and Instacart provide food and consumer products to our front doors. And Airbnb gives us access to homes almost anywhere in the world. But how impactful is this ongoing shift? Some recent reports by Forbes, McKinsey, and MBO partners have given us some awesome stats. So let's look at some of them. Freelancers contributed $1.2 trillion to the American economy in 2020. About 36% of US workers in some form generate income through gig economy work. And both wages and participations in gig employment have grown by over 30% in 2020. But how is this going to continue? So these reports show us that the gig economy is expected to grow 3 times faster than that of the overall US labor force. And 80% of major US companies plan to switch some of their employment to freelance labor. Globally, there's a lot more opportunity for growth. The 5 largest gig economies are in the US, China, Brazil, Japan, and India. However, less than 5% of workers in most developing countries are part of the gig economy. Clearly, there's amazing potential and a lot of disruption going on from the gig economy. So, thinking as the investors we are, what are some of the best opportunities? Where do we see good investments? And how can we take a hold of this ongoing shift to generate wealth for ourselves? Over the course of this series, we're going to be diving into one of our favorite winners of the ongoing shift towards gig employment, and that is Upwork. We're going to be revisiting the Upwork investment thesis, which was first laid out on MoneyWiseSmart at the end of 2019. You can check out a link to those original videos below. Since that first video, an investment in Upwork stock would have appreciated over 300%. Yet a lot of these trends we're looking at give us the idea that there's a lot more to go. Here's our normal disclaimer for you to read. While digging into Upwork, we plan to apply the MoneyWiseSmart investment framework to evaluating this company. This investment framework was first explained in the What We Look For series led by Rupam. You can check out those videos at the link below. The MoneyWiseSmart research framework breaks down our analysis into 8 simple questions. First, is the business easy to understand? Second, are we investing in businesses that have great growth potential? Third, does the business have great competitive advantages? Fourth, is it led by a good management team? Fifth, does the company manage debt well? Sixth, are there levels of healthy profitability that are sustainable? Seventh, does the company require a lot of capital to run the business? And finally, does this business generate healthy returns on invested capital and equity for shareholders? Over several upcoming videos, we're going to dive into each one of these key questions while evaluating Upwork. As additional content is created for each of these topics, we'll include a link below. You can also subscribe to our page to get notifications as new videos are created to help you generate your own wealth. Today, we're going to refresh our high-level overview of the company, talk about the things we like and dislike, and look at how the stock and various value metrics have changed since our first video on the company a few years ago. So what is Upwork? Upwork is the world's largest work marketplace that connects businesses and independent talent to one another. Essentially, it is a platform for companies to find freelancers and freelancers to find projects to utilize the skills that they've developed over their careers. As a freelancer myself, it's actually Upwork that brought me to the MoneyWiseSmart team, so a topic that really hits home for me. Over the last several years, the company has generated significant growth and has grown revenues to over $300 million. However, the company anticipates that by 2025, secular tailwinds will help revenues exceed $1 billion for the first time. This represents growth of over 20% annually from 2020. From a competitive standpoint, Upwork's leading marketplace gives the business a competitive advantage over peers, though there are a lot of them. And the business model creates a flywheel effect, creating their own success to further widen the moats around this business. As more workers and companies turn to Upwork to help find the jobs that they're looking for and the talent that they need, this will further help cross-selling, generate more growth, and create a better competitive position for the company. Upwork is led by executives that have been with the company since its formation nearly a decade ago. But recently, they brought on a number of new hires at the executive level to help further accelerate the growth of this platform. One of the things that we like most about Upwork at this point is how clean the balance sheet is. This company is currently in a net cash position, has very little debt, which gives them significant flexibility when utilizing the balance sheet for capital allocation and future growth. From a profitability standpoint, gross margins have recently exceeded 70%, and management believes that there's significant room for upside to those numbers. However, recently the company has been aggressively spending to grow the business and scale the platform. This includes aggressive spending on sales and marketing, research and development, and the general and administrative spend needed for a significantly larger business. And because of this, the company currently does not generate earnings and has negative EBIT margins. In the future, as that spending comes down, we think there will be a noticeable improvement in profitability. As growth spending comes down, we also think that the business won't need much capital to run the ongoing business. And this should position the business to generate great free cash flow generation in the future. And finally, when looking at the returns profile of this business, this remains one of the biggest question marks in our opinion. That's because without profitability, these metrics can't properly be calculated. In the future, theoretically, the business should be positioned to generate great levels of return with the clean balance sheet, the high levels of profitability, and the minimum requirements needed to continue growing and running the business. So with all those things together, we think that there's a very compelling long-term potential from an investment in a company like Upwork. Sitting here today in October of 2020, the stock recently exceeded $56 a share. At that price, that implies an equity value of over $7 billion and an enterprise value just below $7 billion. As you can see to the right, as we look at different valuation multiples and what are implied at the current stock price, you can see that this stock trades at pretty rich valuation multiples, nearly 19 times 2020 revenues, with most other valuation methods applied to 2020 numbers not really making much sense. But as we look out to the future on the 2021 targets, or even more importantly, on the company's long-term targets, you can see that there's a lot of potential for this company to grow into the current lofty valuations. What gives us pause at the moment, however, as mentioned already, is the lack of profitability is one thing which we are going to continue to watch and monitor to get a better sense of what the true potential could be of this business. So as we've seen here today, the gig economy is generating significant changes in the global workforce, and Upwork is one of the key winners in this environment. We believe that the Upwork platform, connecting freelancers and companies together, has a significant opportunity to grow in the future, has a business model that generates a flywheel effect, further strengthening the moat around the business, has a solid leadership team running the business with recently added talent, a clean balance sheet, healthy levels of gross margins, which are sustainable and improvement, requires little capital, and in theory will generate significant returns into the future. So as you can see, this company checks the box on a lot of the investment framework which MoneyWiseSmart institutes. As we dive into this company in more detail, we're looking forward to providing you with the resources you need, the research we've completed, and a framework to help you think about investing into the future to compound your wealth.
At MoneyWiseSmart, we do deep dive research into high quality companies that we look at as great long-term investments. Some of the work we have done is available for free on our website as part of our free research series. You can check that out at the link below. We aim to help you learn to compound your wealth. If you enjoyed this video, please click the like button and subscribe to our page. And we'll be back with another video soon.